seeing and what kind of traction that we are seeing, and followed by our view on the key indices, both Nifty and banking index. And then some of these stock ideas means stocks which are looking technically positive or negative depending upon the markets and the overall chart structure. And we'll end the presentation with a quick feedback poll. And post that you can ask your question, anything related to the webinar, means anything which we have missed covering during the webinar, any particular sector that you wish to know about. No stock specific queries because we wish to end this webinar and we likely to make this webinar more prudent for in a general audience. It's not like anybody's specific asking any particular question related to any particular stock. It's more of like an individual approach. So we feel that it should be more of like a general view that any theme, any sector that we like to know about, definitely we can ask the question during the Q&A. So without wasting much time, let's start with the presentation now. So quick disclaimer, yes, that this is not a trading or an investment recommendation. So the information that we are going to share in the next 15-20 minutes is more of about the educational content. So if you wish to take any bets based on the information shared, please check with your financial advisors. So now, phenomenal, move in the index so far. But what we are seeing from the last 4-5 weeks is a week of up move followed by a week of consolidation. So this week was a week of consolidation wherein we have ended almost on a flat note. Both Nifty and Sensex, as you can see, ended almost at the same level that we have closed on December 29. But in the meanwhile, sector-specific, stock-specific move is something that continued across sector. So on the gaining side, we have Realty outrightly, a winner, means 7.5% kind of a gains, almost 8%. Then Media, Pharma, Energy, and FMCG. So if you remember that in the last 3 weeks, we have been seeing that defensive should be in the focus area, both FMCG and Pharma. Rest will continue to witness selective moves in between, and that is what we are seeing for the third successive week, that Pharma and FMCG managed to end in green. On the losing side, auto, banking, metal, IT. So it's not very sharp cuts, but yes. IT majors, certain private banking majors, and some of the names from the auto and metal basket also witnessed some profit taking. Talking about the gainers, of course, 2 names from the Adani group of stocks, Adani Port, Adani Enterprise, phenomenal gains. Then we have recovery in Bajaj Finance, ONGC, Sun Pharma. They were anyways trading at the record highs. They strengthened their move. In line with the sectoral move, iShares was among the top losers, means 7% kind of a cut. Then from the metal space, we have JSW Steel, LTIM from the IT, and M&M again from the auto space. And lastly on the list, Ultratech Cement, where we saw some profit taking after this phenomenal surge. So this is how this week panned out, a muted week, but yes, a stock-specific move continued. The broader indices managed to end higher in line with the the select sectors which have performed well. But yes, the kind of quantum or the kind of advance to decline ratio that we used to see earlier, that is not there in the broader indices. But yeah, the tone is still positive. Now let's talk about where we are heading in the next week. So this is the daily graph of Nifty, and as you can see that after this move, that we had a sharp decline in the almost second half of the December. Then we have recovered the entire decline. This negated this negativity, and then we reached toward 21,800 mark. But again, we are seeing a bit of a profit taking. So we have not traveled much from this point. So what it indicates is that now we are facing profit taking or resistance on rise. Unlike in the past instances, it's more of like we used to see very nominal range consolidation followed by an up move. But now we are seeing retracement of the move. Earlier we were not seeing it much. So yes, it was price wise and time wise both we are seeing market taking a breather, but still the tone has not turned negative in the index. Why? Because if you remember, the last week we talked about 21,500 being the support area. So that exactly worked out well. Means we made a low around 21,500 and then we have rebounded to 21,750 again. So for this week also the support remains the same, that 21,500, 21,150. This first line of Fibonacci retracement that will continue to act as a support area. Upside also 21,800, 850. Once we reclaim this mark, then the negativity which we are seeing right now, or you can say that not so decisive move that we are seeing in the index, that might fade away and we'll again see buying interest emerging. So 21,850 is something that one should remember, and 21,500. So broadly, this 300, 350 points is something that we expect index to continue to trade amid the mixed clues. We'll talk about why the mixed clues and what one should do about that. So once we cross 21,850, then 22,150, which is the positional target that we have been maintaining for almost like 4-5 weeks, we are going to see the index inching towards the same. So as of now, tone is positive, but for momentum, for positivity, we need a close above 21,850. What we should do in the interim, we should look for the sectors and themes which are performing well, wherein we are seeing consistent buying interest. Okay, next, banking. So basically, banking, we were hoping that after the recent outperformance, there's a possibility that banking might do well. But again, we are seeing the mixed trend that we used to see it earlier, wherein select private banking majors are moving in other direction, and some of these names are holding strong. That is what we are seeing at present. So if you notice that SDFC is witnessing pressure continuously, but at the same time, Axis, ICICI, they are holding strong. Kotak is a mixed bag right now. So when we see these kinds of undecisive trend within the sector, that caps the move, and that is what we are seeing in the banking index. So 47,300, that will continue to act as a strong support area. Prior to that, we have 47,700 also, that is immediate support zone. But to regain momentum, we need a close above 48,600. So banking, we feel that we should be very cautious about where we are planning our trades. So within the private banking space, as discussed about Axis, ICICI, they are comparatively better structure to look at. And needless to say that the earnings season is also about to begin. So obviously, we'll see the volatility continuing and extending. So they are comparatively better structure to look at. Then SDFC, then Kotak, and then PSUs like SBI, Bank of Baroda, Canara Bank, and the list goes on. So in banking, we feel that this volatility might continue further. So restrict your trades, avoid aggressive longs. Now, coming to the stock specific move, wherein we expect there's a possibility of fresh traction or continuation of the move. So Balakrishna Industry, this stock has been trading in this range for almost 2 years now. You can see this range, broader range, and we are currently for last almost 2-3 months hovering around the upper band of the same in a very tight range. So this is a very positive sign. We have discussed this about stock earlier also during this webinar, and we have still not seen a breakout yet. But now we feel the kind of price action that we are seeing, it's a weekly chart. On the daily chart, what we are seeing is possibility of attempt of a breakout in near future. So this is one such stock which can result in strong momentum if it manages to cross this 2650 mark decisively. So one can put an alert and look for long trades once it crosses 2650. There is one stock that one should keep on radar for the next week. Next on the list, BIOCON. So though we are still very vocal about the outperformance of the FMCG and the pharma names, and BIOCON, despite being an underperformer, this week was exceptional. Means why? Because almost 16% kind of a gains. This is strong green candle, this is the weekly candle. And look at the volumes also. These are the average volumes, like, less than 2 crores. And this week we have managed to see the figure of 7.5 crores. So we feel that the underperformance that we are seeing in BIOCON is likely to end soon, though why we are seeing that it's not ended yet, because as you can see, this declining line which indicates a downtrend. So once we cross this mark, close to around 300, then this trend is going to reverse, and we expect the catch-up move in BIOCON also. So this is one such stock that you should be on keeping in your radar. Now it should hold in case if it retraces, then 270 280 zone it should hold. So it's going to be a test once we see some profit taking the pharma space, whether it manages to hold 270 mark or not. But yeah, once we see this trend line breach above 300, then of course possibility of testing 320 330 in no time seems much higher. So this is another stock that one can keep on radar for the next week. And lastly on the list, UBL, a clear-cut breakout after almost 1.5 years of consolidation, a broader range 1350 to 1750. So as per the range, it should inch toward 2150 2200 mark. So obviously, it's not going to be a single week or single day move. We expect this move to happen gradually in the weeks to come. So this is one such stock that one can look at for accumulation. So just to sum it up, after the week of consolidation, we may see the initial sessions of the next week also on a similar line, means this consolidation might continue. 21,500, 21,800. That's the range that one should keep in mind. Until we decisively reclaim this mark, 21,800, I doubt that there'll be any significant move in the index majors also. So in the meanwhile, you should focus on stocks, themes, which are anyway showing relatively higher strength. So we'll talk about, we have already talked about some of these sectors like pharma, FMCG, where we are seeing consistent buying interest, and the rest we are seeing mixed trend within the sector. So IT majors is something that we recommend to avoid for a timing now, because volatility is high. Plus the tech heavy index in the US, Nasdaq Composite, we are seeing profit taking on that front as well. So let there's some stability on the US front. Then obviously the earnings season also about to begin, and the IT majors kickstart the session. So we expect the volatility to remain high, at least in the near future. So one can avoid, if the view is very short term, the IT majors, and focus on the other sectors basically, wherein we are seeing consistent buying interest. On the stock specific front, we talked about Balkrishna Industry, BIOCON, and UBL, which looks upbeat for the follow-up move or for the fresh up move. So this is all from the presentation part, and now we'll do a quick feedback poll. So please fill in your feedback, and then you can start posting your question using that Q&A tab. Please quickly fill this feedback, and if you're done with the feedback, you can start posting your question. Use that Q&A button, and anything related to any particular sector that you wish to know, or anything that we have discussed during the webinar and you want more clarity on that, obviously you can ask. All right, so let's start with Q&A now. Thank you, Mr. Subramaniam, for the feedback. Okay, now, see, I requested not to please ask about stock-specific questions, and so that it benefits the larger audience. I understand that you might have any position and you might be stuck, but instead of asking about any particular stock, if you ask me about the sector, it would be helpful for the others also. All right, so let's start with the question on metal and the PSE space. So metals, still I feel that the tone is positive, means yes, we are seeing a bit of a profit taking in some of these metal names. But metal as an index, we still have a positive view, and we feel that this sector has potential to do well further from the current levels. But yeah, one needs to be selective because some of these PSUs name like SAIL, National Aluminium, they have done exceptionally well. So we feel that chasing them on the higher side, you should be very strict with the stop losses. And if you can't maintain your stop losses, you should not venture into such adventures. Comparatively, the private names are less volatile at present, and but yes, some of the name like Hind Copper, wherein we are seeing consistent buying interest after every pause. Then we have stock like Hindalco, which is consistently moving higher. VDL, in fact, is attempting fresh upside move. So these are some of the names that one can continue to look at within the metal space. PSC basket, still they are holding strong, but again, I would recommend that after this phenomenal up move in the PSC space, one should keep on trailing their stop losses in the existing position because nobody knows honestly at one time when it's going to be a reversal of the trend. So they are still performing well, be it the railways, be it the banking space, be it the power finance related stocks. But after this strong move, if 5-10% correction is very normal, and it can happen in a single day also, provided obviously that results is something that we are closely eyeing now. So obviously that could be the trigger in case if the result expectations are not in line with the recent price move. There could be sharp corrections also. So in PSCs, I would recommend to avoid aggressive trades. If you have existing position, book profit on rise and keep on trading your stop losses on rise. Okay, next we have on the sectorial front, tire space. Mr. Linga have asked about tire space. So Balakrishna, Mr. Linga is once a stock from the same space wherein we expect fresh traction. Then others named, they are anyways doing well. JK, Apollo Tires, they are holding strong. So fresh momentum, I feel that there is only one candidate left out, which has still not participated in the move and have tremendous potential considering the recent consolidation. But rest of the name, definitely they are still holding strong. So one can continue to look for buying opportunities on dips. Okay, next Mr. Kumarasan on oil and gas. So yes, see this energy basket. Largely, we are still seeing this positive tone continuing. So OMCs, after a marginal dip last week, they have resumed the up move. In fact, the refineries like ONGC, oil, they are also holding strong. Plus the gas distribution, they are also doing well. Means a strong recovery in MGL, IGL, Gujarat Gas. It's a trend reversal. So the entire space is buzzing, but after this, recent up move, there is a possibility that we might see some fresh consolidation in these names before the next leg of the up move. So fresh buying, I would recommend you to wait, especially in the names which are look slightly stressed. So stock like ONGC, wherein we have seen very sharp move, and from the energy space like Coal India, wherein we are seeing trading at the record highs. I feel that gas distribution names are comparatively better in case if somebody is looking for fresh bets. Okay, Mr. Avera has question on any particular sector that one can be tracked for long-term investment. So we are not maintaining sector-specific approach, uh, and it should be more about stock-specific approach after this the recent surge that we have seen in the last 6 to 8 months. But yet, I feel that sector which have not participated in yet, IT is one wherein we are still 7-8% away from its record high. Then selectively, we feel banking, though we have seen decent recovery, but still private banking majors, they have not done much in the recent rally. So there's a potential in private banks. And then lastly, FMCG and pharma, obviously, we still feel that there's more room in these, names. So, Mr. Kumar, we've already discussed about banking sectors, and we've also talked about, the preference means excess ICICI, they are the preferred names that one can look at in case if somebody is planning any trade in banking space, despite the overall, choppiness that we are seeing within the private banking space. Okay, Mr. Benjamin has question on cement sector in the coming week and for the series. So cement is now taking a breather. In fact, we are seeing profit taking. UltraTech is one such example. Then at the same time, we have stock like Dalmia and Ramco. They are seeing more of a price time-wise consolidation. Means they are not declining with the markets. They are just going sideways in the range. So within this space, we feel that Ramco, Dalmia, India Cement, and of course now the Adani related group stocks, ACC and Ambuja, they are also witnessing recovery. But pure play means Dalmia and Ramco, they are holding very strong. So these are some of the names which one can look at from the cement space. Okay, large NBFCs prospects in the coming weeks. So they are doing well. In fact, if we compare it with the banking sector, they are doing in fact comparatively better. So you talk about Shriram Finance, you talk about Chola, you talk about L&T Finance. Then we have Bajaj Finance also, which is witnessing recovery now. So in this space, we feel that space means Chola, Bajaj Finance. These are some of the names which still feel we have further room. M&M Finance is not participating in the move, and I still doubt that there'll be any meaningful recovery until we see some decisive price action. So as of now, M&M Finance is something that one can avoid. The rest of the counter is something looking comparatively better. Okay, Mr. Devinder Sabharwal on FMCG sector. So FMCG, as we've discussed, pharma and FMCG from the last 3 weeks, we are reiterating that one can continue to look at. ITC, HUL, Marico, yeah, these are the top 3 names that one should keep on radar in case if you're looking for a short-term positions. Metal we have already discussed to Mr. Jitendra Kumar. All right, so there was some technical issue. Sorry, guys. So yeah, we were talking about media sector. So media, the biggest name in this sector as of now on the listed space, Z is something that we are also closely eyeing. Though the stock has formed a strong base around 250 to 60 area, and we are seeing buying interest emerging on every day. But on the higher side, also 290, 300 zone is something that it's witnessing pressure. So until we decisively reclaim this 300 zone and with some volumes, then we may see a decisive up move in this space, and that might cascade to the other names like Sun TV and the other listed players within the media space. So as of now, keep a close eye on Z, and a close above 300 would trigger the next leg of up move. Okay, telecom sector. Yes, so Mr. Panchal, I've asked about telecom sector. So this space is buzzing, of course, for the obvious reason, because Reliance and Jio, Bharti, they are anyways doing well. They have been consistently performing. Their stock price is also reflecting the same. We have started seeing action in Idea after a long period of underperformance. And uh, the kind of move, the kind of price action with volumes, we are seeing possibility of stock maintaining this momentum is high. This is about that. And as a sector, I feel that though in general, I guess there's some issue with my all right. So yeah. So it's not very encouraging data, but overall, the kind of price action that we are seeing, it's looks like that this gradual up move will continue in this sector. But if we ignore the short term up move in Idea, Bharti Airtel being the consistent name within the listed space, which one can look at. Maya Deviji, we have discussed about IT, and that's the only sector that we have recommended to please avoid for short term, because the kind of choppiness that we are anticipating in the next week prior to the earning and post earning also. And plus the IT stock in the US market, they are also witnessing profit taking. So that might result in further decline or choppiness in our markets as well. So for timing, if the view is short term, one should avoid. If your view is long term investment, then definitely one can look at post the earning announcements. Mr. Charanpal Singh ji have asked about specialty chemical space. So I guess last webinar or maybe prior to that, we've discussed about we are seeing early sign of recovery in chemical space, and some of these names they have done well. Deepak Nitrate, Pidilite, and SRF, they have started forming pivots. So yes, selectively we can look at the chemical space for accumulation if the view is say medium to long term. And these are some of the names which one can look at. Right, IT sector we've already discussed. Okay. Okay, in condition to the query on pharma sectors, the best name in this space, which we still has potential to do well, Divis, Dr. Reddy's, BIOCON, we've discussed during the presentation itself. Yeah, these are the top three names, because Sun Pharma, Lupin, Cipla, they have done pretty well. So these are the names which have not participated much, and there's a potential, considering the recent price action, that they can do well. IT discussed already. Mr. Rahul, in case if you're associated with us, you can send an email to your branch manager or your business partner, and they'll share you the list of stock that we have recommended on New Year for accumulation, for the next 1 year. And in fact, you can access the same on by going on our portal also, religareonline.com, and I guess that is accessible to the other clients also, prospective clients also. Right. Chemical sector we have discussed. All right. So, see, I've requested not to please post your stock specific questions, because it's not in the interest of the others, those who have joined this call. So, largely we have covered all the sectors, major sectors. So, barring IT, something that we've recommended that not IT is not that we are not seeing traction. It's just that the volatility is high, and when we are seeing consolidation in the index and So one should look at the sectors which are performing comparatively better. So that's why we have recommended to avoid IT. Rest of the sectors, one can selectively continue to buy. So yeah, with this, we have answered all the queries related to any particular sector. Please excuse for the stock-specific queries. And yeah, with this, we can end the session now. And next week, same day, same time, we'll connect again. Thank you, everyone, for participating.